Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on the market rundown, SPY IWM QQQ daily weekly time frame. So we saw the SPY with some bearish momentum to end last week, closing at the lows and looking like a temporary top of that bounce was being set. And indeed it was, as we saw a lot of weakness today and an all-out dump on some significant bear volume. Now, the bulls did buy that dip, and it was in part because the financial sector bounced off of its key 100-day moving average support. The tech sector bounced off of its key daily middle Bollinger Band support. And so the bulls had bought this dip on SPY, and our new higher low has been formed. So we are reaching an equilibrium in response to that all-out dump day. We had the high, our low of the pullback, lower high. Now we have our higher low set. So we have a nice range to be watching of 233.91 support and a double top at 236.52. A break of 236.52 and the bulls have a lot of momentum in the short term, and a break of 233.91 and the bears have a lot of momentum in the short term. So as of right now, we're watching hourly moving average resistances as the bulls had control the last 4 hours of the day on this bounce. But we did see a little bit of weakness at the 200-hour moving average resistance. So the question is going to be, can the bulls see follow through tomorrow? And I would not be surprised to see the next couple of days see some tightening ranges in between these ranges as we continue to reach this equilibrium and have things tighten up. The weekly time frame for SPY holding these exponential supports, bouncing off of them on a back test. Bulls want to see a nice green week confirming this candlestick and confirming that follow through, because if we do lose these exponential supports, we're going to see a bearish MACD cross, and then we will likely see a bearish TCG cross, and our target would be the weekly middle Bollinger Band support, which is at 229.15. That's a ways away, so the bulls really want to hold this new low of 233.91. Losing that level would be a clear red flag to the short-term bulls. IWM did not see anywhere near as much bounce as the S&P 500. We closed very weak and on a ton of bear volume compared to the bull volume on the way up. So we saw a very significant bull move to the way up, 5 green days in a row, a bearish reversal spinning top candlestick being confirmed. We did hold the middle Bollinger Band support, but not by much. And if we do get a break of that low, 135.60 tomorrow, we're looking at 135.30, and then the 100-day moving average, which will be just below 135. So the bears have a lot more momentum on IWM, nowhere near the size of that lower wick. And the weekly time frame is right back to this middle Bollinger Band. We keep going back and forth with it. That means I don't really care about that middle Bollinger Band because we have been seeing that back and forth. I care about these exponential moving averages and the potential bearish TCG cross that we are on the verge of. The bulls held that off with the strong week last week. We could see it follow through the next couple of weeks. So we're watching very closely to see if this green 4-period exponential crosses the 8x period or the 8-period exponential to the downside with that bear cross. QQQ hit a new all-time high today. It still remains very strong, new all-time high 3 days in a row. So our new higher low of support is 131.56. We didn't even test the daily middle Bollinger Band. So the fact that we hit new all-time highs, we have higher lows and higher highs continuing on the daily time frame. Where if you look at the S&P 500, we have lower highs and lower lows. So it's completely different in terms of the trend on the daily time frame. The tech sector keeping the QQQ bulls in full control with a lot of strength, and we have to see a upper Bollinger Band get out of the way here, really, if we want to see any kind of significant move to the upside. We had 5 rejections in mid-March, and we have 5 rejections in a row now at the end of March. That is 10 rejections from the daily upper Bollinger Band on QQQ in, well, actually today's April, so we'll call it 9. Either way, we're rejecting from that upper Bollinger Band a lot. So that upper Bollinger Band is going to be in the low 133s. It is starting to ascend a bit more rapidly, but very clearly it's been keeping a cap on the price and keeping that temporary top in for the bulls, even though we keep hitting new all-time highs. The weekly time frame still very strong, holding exponential moving average support, keeping those exponentials very strong, and there's really no sign of any slowdown here for QQQ bulls. So it's been this way for a very long time, for months at this point, but QQQ is the lead bull, SPY is in the middle, and IWM is the lead bear out of these three markets. I appreciate you watching. We'll check back in tomorrow. Have a great night.